We at the LinkedIn building. I'm about to go give them some financial literacy and how to properly structure the LLC so they can go get access to funding.
Former graduate of JRP, Mr. Holly Garrett.
I'm glad to be here with y'all. So I say my name's Holly Garrett. I also go by Wally. Just tell y'all a little bit about me. So like I was in this room probably almost 2 years ago. I was in this 20 years, I did 13 years off that. This program right here was the first program I came to when I got out. I was able to get out in 13 years because I changed my life while I was in there. About halfway through that process, I changed my mind state and I decided to start changing the people I was around, the things I was doing, the things I was listening to. And the credit is beautiful to me because it's the same thing. Once you learn how to change your thinking and change the systems and apply these systems, you can get perfection and you can find whatever it is you're looking for. My whole plan, like I said, was to get into construction management. I was gonna work for 10 years, save my money, and to be able to invest in my business in 10 years and go do what I'm doing today, right? I'm a Sac State graduate. I got a communications degree from Sac State, graduated with a 3.67. And I was a valedictorian almost every semester. Thank you, appreciate that. I also was a mentor and a program creator, and now I'm running my business, Rise Enterprise. Rise Enterprise stands for Reinvesting Interest in the Social Equity. So what I do specifically is I boost people's credit scores up so they can reach these data points so they can access funds. But the first thing is to know what your credit score is. What is your credit score attached to? It's attached to your name. It's attached to your social security number, credit cards, bank account, checking accounts, savings accounts, pledge loans, home loans, car loans. These are all different products that the banks sell. This is a capitalistic country. They expect everybody to have businesses out here. And if you don't own a business, you're a consumer, right? So you're serving the need of the business. And that's how the system is designed. This is economy. Credit, capital, and business structure. Right? You start with your credit. You the guarantor. That's how you access unlimited amounts of funds with the correct credit profile. So what is credit? Credit is your financial report card. That's why I asked y'all if everybody here know your credit score. All right, that's your financial report card. When you go to get something on credit, it's equitable because they're not looking at your race, they're not looking at your sex, they're not looking at your age or anything like that. They're looking at this credit profile. Say you want to invest in a business, right? It's leverage. You have the access to the funds. You have access to the capital, like he was just asking. So good credit gets you access to capital, which gives you leverage to get ahead. Some of the myths that I hear all the time is all debt is bad. Who believes that? Who believes debt is bad? Cash is not king. You need credit out here. Cash is cool. It look good. It's fun to have, but you need to have your credit right. That's how you're going to get access to anything. Also, checking my credit hurts my score. Whoever heard that? That checking your credit hurts your score. Okay. Right, that's not true. You can look at your score all day if you want. The 3 major credit bureaus are TransUnion, Equifax, and Experian. Now, all lenders don't look at all 3 of these credit bureaus at the same time. Most just look at one when you go to get access, when you want to get a product from them. For example, Navy Fed. When you go to get access funds from Navy Fed, all they look at is TransUnion. They're not looking at these 2. So theoretically, you could have late payments on Equifax, late payments on Experian. If you don't have any late payments on trade, you still go get the money because this credit profile is good. If you look at your credit profile, it'll be 3 different scores. They put it together to a FICO score, which makes up one score that a lot of lenders just look at that FICO score. But each of your bureaus will have a different score of their own. You can turn credit into cash flow and investments. Say you get a credit card, has 0% interest on it, $25,000 or $50,000, whatever. Say you know somebody owns trucks or got a truck driving business. They're looking for somebody to invest in. You could liquidate the card and make that investment because now you have the leverage. So this type of things credit allows you to do. You can fund marketing, mentorship, or tools. If you run a business, that's where you're gonna spend the most of your money at in marketing. Getting your message out, let people know what you're selling. Mentorship. If you wanna be successful at something, you need to find somebody who's already been successful at doing it. And why not pay them to show you how to be successful? So now let's talk about how your credit score is calculated. From 300, this is where your credit starts at 300, that's the lowest it could be, to 850, that's as high as it could be. So the first and most important thing is on-time payments. You have to have 100% on-time payments to access funds. Next, the most important thing is utilization. So utilization is how much of your credit that you're using. So for example, if you have a $100,000 credit card and you're using $30,000, you're using 30%, you're at 30% utilization. The reason this is important, banks don't want you just to use their money. They don't want you just utilizing that funds to pay your rent, to go shopping. That's not what they want. They want, first of all, on your personal side, they want to see that you know how to use it. So keep it below 30%. Because you from that 30%, keeping it below that 30% on your personal side shows the bank that you know how to handle the credit, that you understand how to use it. It shows that you're responsible. Mixed accounts just means the difference between installment accounts and revolving accounts. What's an installment account? If you go get a house, $500,000 house, they give you the $500,000, you pay that back in installments every month, right? So you pay the same amount every month till that's paid down. Revolving accounts are a little different. That's like your credit card or lines of credit. You only pay back based on what you borrow. Credit history, that makes up 15%. That's just how long you've been handling credit. They want to see you handling credit for at least 3 to 4 years. And then new accounts makes up 10%. 10% new accounts, when I say that just mean that'll show up in inquiries. So your new accounts show up in inquiries. So every time you apply for credit, whether you get it or you don't get it, it shows up on your credit profile as an inquiry. Lenders want you to have under 4 in 6 months, but really in 2 years. This is 100% of this 850, right? If you hit all these points, you're gonna be at an 850. We rarely see that though, right? A 680 plus credit score. That's what you got. That's the basis, right? 680 plus credit score, 720 plus is ideal. 100% on-time payments. We talked about that. Then you want to have 10 to 30% credit utilization. Now, when you want to go get funded, we already talked about the 30. But when you want to go get that bag, like you're really ready to go get funded, you want to be under 10%. For funding purposes, you want to have 10 to 20 accounts, 10 to 20 open accounts, both revolving and installment accounts. Then you want to have 2 to 5 years average credit age history, and then less than 4 inquiries over, they say 6 months, but really 2 years. Inquiries last 25 months on your credit profile. So say you don't meet those data points. Say your score is not a 680. Say you don't have enough accounts on there. There's things you could do. Now, with these are credit boosting websites. You go on these websites, you open an account with them, and all they do is they basically put a primary account onto your credit profile, which boosts your score because it adds another account, and it's going to be a good account. And it's like usually like a yearly subscription. I know Ava, I just helped somebody do Ava. It was $98 for the year. So they put that $98 on there, and at the end of the year, Ava gives back like 98% of the $98, and then they just redo it every year, right? M2 is a law, but they also have software. M2 is a law that was made for the credit, and basically it says anything that is on your credit profile that does not belong there should be removed, and it should be disputed factually. You get authorized users. Authorized user is if you know somebody who has a credit card, you simply ask them, could they put you on their account as an authorized user? It doesn't cost them anything. It doesn't cost you anything. You don't have to have the credit card. Only thing you get is all their good stuff. So whatever their limit is, whatever their age is, you get all that on your credit profile. Trade lines are very similar to authorized users. So only thing with a trade line is you have to purchase that. Trade lines go from $200 to $1,200. And the same concept. Trade lines only last about 60 days. Okay? Rent reporters. I love rent reporters. You could backdate your rent till you was 18. A lot of people sleep on credit limit increases. So if you have a credit card already, another way to boost your credit profile and your score up is every 60 to 90 days, call your credit card company and ask them, can they raise the limit? I told y'all what a fundable credit profile looks like. Now, what a fundable business structure looks like, because that go hand in hand, right? You can get personal funding, but business funding is so much better. A proper business structure looks like this. A properly formed LLC means that you actually went through the Secretary of State, looked up that name, and then filed with the Secretary of State and paid those fees. An EIN, you can get that from irs.gov for free. Then you want to have your business address, a business address and a business phone number, not your home, not your place of residence. But the main purpose of virtual office is to have that address as a business address, so you're not using your home address. So when you show up to the bank, when they ask you what's your personal address, and then they ask you what's your business address, it's not the same. You should have a website for your business if they want to look you up, and also your business email. My business website is riseenterprise.com. My business email is hgarrett@riseenterprise.com, not at google.com or aol.com. Right? I have my own domain, I have my own business email. And then you want to have the right NAICS code. What's that? The right NAICS code is how you describe your business. Is it a high risk or low risk? Right? So you don't necessarily have to know what the codes is, you just got to have the understanding of what's high risk and what's low risk. And then you get lower limits and you have stricter rules when it comes to personal funding. Now when you go to the business side, Business credit does not report to your personal credit, profile. It's no utilization. If I have $100,000 in credit, I can max that thing out as long as I'm paying my minimum every month. It's not gonna affect me as far as my credit in any way. You get higher limits on the business side. The great thing about business is 0% intro APR credit cards from anywhere from 6 months to 21 months. So why does your credit profile matter? A weak profile will get you high interest rates, low amounts, low limits. A strong profile, you get them 0% interest credit cards with high approvals. And credit scores tell lenders how much they can trust you, of course, right? But before they even meet you, they just looking at your credit profile. That's how they gauge if they should trust you enough to give you some money or not. It's the Navy Fed play. How can you access funds from Navy Federal? You get 3 products. Get you a checking account, a savings account, and a business account. Deposit however much money you can deposit into that account. You immediately tell them you want to get a pledge loan with whatever amount of money you have inside your account. So if you have $5,000, you say, I want to get a $5,000 pledge loan. You have to wait. As soon as you do all this in one whop. Say, I want a $5,000, you got to probably wait 24 hours for your account to clear. But then you say, I want to get a $5,000 pledge loan from Navy Fed. The next day, you pay that pledge loan down 95 to 98%, right? You pay it down, and then you put the rest on auto pay. Now you have access to your $5,000 again, plus you have a $5,000 line of credit with Navy Fed, plus that's gonna show up on your credit profile. You just use your $5,000 to create $10,000, basically, right? So now you're good. You let that season for a little while. You could do that 2 more times. Once you get to the auto pay step and your money is back in your account, you wait a little while and then you can run it again. Probably not the same exact amount, but you can run it again. And while you're doing this, once you're 60 days in with Navy Fed, they allow you to deposit $2,000 off your credit card every month. So you continue to fund this pledge loan with your credit card, right? So you can use other people's money to fund your pledge loan, and you can do that every month. If you done did that pledge loan, like I said, about 3 times, you already good in the wood, like at least 25 G's with Navy Fed. So when you go and you say, I want to get and they do pre-approvals, and pre-approvals are great because there's no hard inquiry. They're going to give you a $25,000 credit card with very low interest rate. They have 0% interest rates as well. It will all depend on your credit profile at the end. But you can put that together in 90 days. And these are the steps.